Hello and welcome to Your Business, Your Wealth. My name is Paul Adams. And right before I introduce one of the greatest men that I know, I want to remind you guys, it really makes a difference if you like and subscribe. Like this episode, comment on anything below, positive comments, negative comments. We love all the comments because it increases the likelihood that an important piece of content that could make a difference for someone will actually get presented to that someone. And I ask you guys to take a minute when you get value from this, be sure to hit the subscribe, be sure to hit the like. And the biggest reason you should is because Corey Shepard checks the analytics on a consistent, ongoing basis, and it makes him sad when you don't like the video. Corey, anything else you'd like to say about your sadness?
I'm just laughing because I have a nice view of my beautiful neighborhood out the window here, and while you were introing, I thought I was witnessing a fight happen. Like someone was doing a good old kickboxing, knee jab. No, just some neighbors, one ducking under the other's dog leash. You know, just kind of like doing the. But I looked down just at the right time to be like, see this like, whoa.
Corey, if you witnessed a fight out your window and then you gave us like a solid Joe Rogan play-by-play like UFC, I'd say we put the episode out. No, right. And Corey lives in a very, very, very nice neighborhood, but it is in Chicago, so there's always hope that we're going to have an episode like that. To all of our Chicago friends, clients, listeners, you know where you live. All right. So today we're going to talk about predictions, Corey. We get to talk about what the predictions are for 2023. And we're going to look at one set of predictions from Jim Cramer, who's one of our favorite content creators out there. And the other is from a series of people making crypto predictions. And we're going to get to come back to this episode at the end of the year. And let's see how these folks turned out. They might have had amazing predictions that turned out to be right for the reasons they said they would be right. And then the more likely outcome is that these stocks are going to do what these stocks do. And it's going to have little to nothing to do with these people and their take on what would happen with them. But we'll see. Corey, you want to take us to this first article?
Yeah. You know, something just occurred to me. Like, I've never seen, and I've looked at it a few times. And if anyone listening can steer us to a link, put it in the notes below. Anyone doing like, hey, I followed everything Jim Cramer said to do for 10 years, and here was my outcome. I've never seen it, and I don't think it exists, and if it does exist, I don't think the results are really good, because if they were, Cramer would be having it, like shouting it from the rooftops as quantified results of what, his investment nice.
Yep, I found his...
Don't buy.
I found his soundboard. And I believe
don't buy.
We're actually broadcasting that, right, Miranda? Oh, we got hog noises.
I can hear it.
Yeah.
I got kind of distracted as I saw this come up on the screen. So anyway,
you should be. Maybe I could start using these all the time. We'll come back to it if I think there's good cause to use any of those.
Well, I don't watch cable TV anymore. So he has. We have this article where he says these 5 NASDAQ losers could rebound in 2023. So number one, methodology for these picks is going through the worst performing stocks in the NASDAQ 100. So I mean, that's a great place to start, I guess.
I guess this would be like me saying what I'm going to do is look through all of the people being released from the occupational therapy section of Swedish hospital near my home to best predict who can run a marathon. Right. We're going to take the real people really taking big hits and people that were car accidents, we're going to make them run a marathon. That's what he's after here.
So this quote, out of the NASDAQ's biggest losers, I think Qualcomm, Lam Research, Micron, and Airbnb will work this year, although not necessarily the first half, he said, adding, and don't forget Illumina. So it's, just the structure of how this plays out, where it's like, oh, I think they're going to work this year, though not necessarily the first half. What does not necessarily the first half mean about what I should buy when and what I should sell when. Like, how is that even advice you could follow? What are you following? What are you doing with it?
Exactly.
No. It's entertainment, y'all. Like, it's entertainment.
But it is entertainment that we should have some fun with. So here's something. Cramer says Wall Street expects semiconductor companies to start losing iPhone orders in 2024. It's possible the company could hold on to at least some of those orders due. The company's push into the auto market should also help the stock. Now,
I did read that Apple is trying to get to India for a bunch of their iPhone production, and Qualcomm's doing it in China, right? Like I think that's what they're doing all their production. Right?
Yeah.
Yeah.
So just for fun, if you guys want to see, this is Qualcomm, just that one stock over the last year. And it didn't like drop all at once. It just kind of had a nice slow fall. Mm-hmm. So as we talk about each one of these, I'll just bring up a chart of their last year for fun. Right. Not all of them, but a couple of them.
This article was written January 6th.
Mm-hmm.
So we're less than a month after the article. So whatever has happened between now and when he said it is pretty inconclusive one way or the
Agreed.
other. So
yep, I'm more like just what's happened to them over the last year.
Over the last year, right.
How big of a hit they took.
Totally. So Micron, he advised investors to wait several months to buy shares of Micron, but make sure to do so before the chip glut is over. Once there's any sign of a bottom, this thing will bounce back like crazy. Always has, he said.
Always has. Well, that might be a good one for us to look up. Micron, and I'll bring it up on the screen. Micron Technologies, their MU is their ticker. What date was this written?
January 3rd.
3rd. Okay. So, hey, it did do something because on January 3rd it's worth 50. It's worth 61 now, Corey.
From 50 to 61?
From 50 to 61. So we should have
bought it right away.
We should have bought it right and sell it right now. But here is the funny thing. So its high was 95 about a year ago, and now it's in its 60s. So not such good news if you're like, I've been in Micron, but maybe good news if what you were going to do is roll the dice. And when we say roll the dice, we mean roll the dice because it is speculation. Because what I'm doing, frankly, this is the equivalent of something I used to do. I don't know, not everybody knows this. I grew up in Vegas, built my first financial firm in Las Vegas, etc. But if I was ever taking people out downtown, I didn't gamble. But sometimes at the craps table, I'd be sitting there playing because it's an easy thing. You sit down, you do a lot of conversation. It doesn't cost a lot of money to sit there for a while. But then somebody would walk by and I would just choose a random person. I'd say, pick a number. And they would say something. And I would just take a $25 chip and put it down on there. That's the same as listening to Jim Cramer. And by the way, it did pay off. I once did that. Some lady said, whatever the number was, I put $50 on it and hit. And it's a legendary story.
Yeah.
And
but how many times did you do that and it didn't
right.
pay?
Well, that's the thing. That story is legendary. And you might be surprised, Corey, I don't remember all the times I lost. Right. And because I don't remember all the times I lost, you guys, a legendary story of like person walking by. And by the way, here's the other problem with that. It worked. And somewhere deep inside my logical and stoic and somewhat heartless way of thinking about the world, I still like somehow creep up. Like maybe there's something that it's a random person. It's not me that works about it. But it's because I only remember the winning. Same thing here. Now, we're going to remember because we're going over this right now. We're going to talk about it in a year. And then,
I think there's a new rule for life. If you ever talk to someone who's done some gambling, anybody who says that they've taken more money from the casinos than they've given is most likely wrong. And anyone that says they've lost more money gambling than they've won is most likely right.
Yes. And actually, I knew a guy who designed the systems inside of gaming machines that dealt with the probability and luck. He said you have a once-in-a-lifetime chance to be above the line. And the only way to stay above the line is quit. There's a chance somebody could play and gamble for about 6 months, maybe. and just have hit the right probability thing. But if they continue, they will always be at a net loss. Now, this is not gambling from that perspective, that gambling is a guaranteed loss because the house is taking a share. This is just a guaranteed loss from the academic evidence that we have that active managers never outperform the markets that they're actually trying to outperform. While Jim Cramer doesn't manage a fund, he's certainly active in the way he tells you to trade your account.
All right, and the next one. So, by the way, Micron, he advised investors to wait several months, but 20% up in less than a month. That's not bad. Like, that would have been a great time to get in. So we see the cracks already.
Well, here's the funny thing about that I would throw out. Trading volume went up a bit the same day this article came out. So, maybe to some extent, now a Jim Cramer recommendation may drive some money into a stock for a week.
Which would help, right.
But we're going to see what happens at year end with all these stocks.
Right. So Lamb Research is the next one, and this is one of my favorites. Just about how he made what he was calling a recommendation. So he said he acknowledged that the near future could be ugly for chip makers. However, you can't afford to wait around too long after this next bad quarter because Lamb stock will bottom months before the business does. So that's the most negatively oriented buy recommendation ever, right? Like,
saying
wait,
the stock will bottom out.
We should buy this one. Yeah.
But worse news is coming for them. So your job is to buy in because the stock is going to bottom first because of Jim Cramer's Ouija board or whatever. It probably comes from the same place where he plucks quotes out of a jar when he says Micron always has come back. I guess you could say that about every stock that's still in existence.
Yeah.
Until they go bankrupt, they always came back. Same with Bear Stearns, Jim.
Right. but Lamb, he's saying, it's almost like saying, hey, this theater is be set on fire. In fact, it's actually burning somewhere, but just stay there in the theater, watch the movie until you smell a bunch of smoke. You don't need to leave right now. Like, in fact, come in off the street for a while. Yeah.
It's going to go bad, but popcorn's going to taste great till it does.
Till then, right. Till the second before it's burnt. Yeah.
Let's
Airbnb.
Skip ahead to Airbnb, yeah.
So he says the company should continue to make money this year thanks to the current travel boom. Investors interested in the stock should buy it gradually on the way down, he added. All right, now I think something weird's going on and we talked about this a little before, where it's kind of meta. We're making a piece of content off a piece of content that someone else made off of Cramer's original piece of content.
Yes.
Because someone used his video. So and this is kind of the point, look for original sources. You could be reading something online that's 3 or 4 steps disconnected from the original article. It could say something completely different because I don't actually know what he means. Like, why you should buy it now while it's going down because it's going to go back up.
Well, that's the thing is, like, Jim, if we got this market timing thing right, why don't you just tell me March is when to put your money in? Right. Like, or you saying put my money in, and if it continues to go down, keep putting money in to a company that doesn't own anything that it transacts in.
Right.
Now,
and
by the way,
a huge legislative vulnerability.
And we just keep putting money in because it is going to come back this year. Cramer says so. But it will be fun. We're going to come back. Here's another one. Illumina, whatever they do. But he already says, I'd rather own shares of this other company than this one. Even though it was a quote up here. But maybe the Danaher didn't take as big of a hit last year to be one of the worst ones. So Illumina is like his charity case he slipped under. So I want to say, before we go through this year, Corey, I'm not going to hold him to the Illumina one. Aluminum. I don't know how to say it. Aluminum?
Illumina.
Aluminum. I'm thinking aluminum is what it's going to be worth at the end of this year. Now, by the way, I don't know anything about the company either. You know what I'm basing that on? It's an individual stock, and an active manager is telling me to buy it. Like that right there is a little bit like, I think that similar if you were to be like your 22-year-old personal trainer gave you investment advice. You just might want to look a little past that. Mm-hmm. But the thing that we're thinking about, and we're going to transition to our other article here, is this very relatively simple ideas that media and pundits effort mightily to predict what's going to happen. And even though over and over again, they've been proven that their estimates are inaccurate, what is true and is not inaccurate is the amount of clicks, views, and engagement they get from making the prediction. Now I'm going to let you guys in on something. That's why we're doing an article on these other people's predictions, because it will give us internet juice and likely drive more to this video because it's making predictions about 2023. So,
but hopefully we're also giving you a lens through which to look at some of these other predictions. This is the meta that we're doing. Exactly. By the way, spot price of aluminum is down 11% over the last year. You know,
yeah, we were talking about. Down less than the S&P 500. Aluminum to the moon, Corey, to the moon. All right.
Can you have diamond hands for aluminum?
Don't squeeze too hard. Aluminum's soft.
Don't squeeze too hard. You'll bend it.
All right. I want to read the key points of this article. Bitcoin fell over 60% in 2022, driven lower by a series of high-profile company failures and a bleak macroeconomic climate. Another reason we could say, and this is a friend of mine, a CPA, he made a great point about cryptocurrency. Having said this, I've engaged in cryptocurrency, have some experience in mining it, that kind of thing. He put it best. He says, do you know why Bitcoin won't act like gold to people? I said, why? He said, or can't ever act as strong as a country's currency. And I said, why is that? He says, Bitcoin doesn't own tanks. Show me the Bitcoin F-22 Raptor and I will show you something that could become a reserve currency. If it doesn't have Raptors, it's not going to have reservability. Those who make predictions about Bitcoin's price last year really missed the mark. And that is said unironically in the article. This is part of the briefing before you read the article. And some market players have stuck their neck out with price calls for what could be another volatile year.
Now, can I read the headline? We didn't read the...
Oh, sorry, yes.
The headline. This is... The headline of this article, the boldest Bitcoin calls for 2023 are out, and a 1,400% rally or a 70% plunge may be in the cards.
So you're
easiest headline to write ever.
So you're saying there's a chance.
So you're saying there's going to be a change.
Now, you know
I also like how there is a Bitcoin in this picture. Like someone made a 3D looking coin. Like these don't exist, but we still need to feel this tethering to the physical world.
Now, you may remember when I interviewed who was at the time our last Treasury Secretary that had been appointed. He was, they just hadn't reappointed a new one since he was. So when he was on the podcast, he was our last one. And there was a guy that made Bitcoins.
Oh, nice.
He made coins. And if I remember right, Ed Moy is his name. He actually was a part of prosecuting that guy. I didn't realize that. I brought his name up on the podcast interviewing it. He's like, yeah, we have a history. I looked it up later. So there were some actual Bitcoins, Corey, and one of our podcast guests helped prosecute that guy.
So some dude made these coins and was trying to like sell them to people that didn't know that they weren't.
No, I think what he had done something, whether it was effectively made him a little hard wallet or something, but they were a coin also.
Oh, cool.
Or he made it and he burned a Bitcoin every time he made one or something like that. But because it was now considered a currency and he was printing it without the federal government's permission, it was outlawed.
Oh,
yeah,
sneaky.
So now here's the thing that I think is a little bit funny at the beginning of the articles. It talks about FTX exchange really affecting crypto prices. And that was right near year end. Like crypto was in the toilet all year up till then. And what is funny, I'll give you guys a little hint. And even if you're not a client, feel free to reach out to us and ask this question. Is anybody currently asking you about X? Because every single thing that we suddenly start getting a lot of questions about, like the 2 years prior to this, lots and lots of questions about crypto. And our main advice to clients is if you can't understand cryptocurrency well enough to hold it in a cold wallet, and we're not going to help you understand how to do that, you should not invest in it if you don't know that minimal amount. Which, by the way, lots of people bought crypto and they were in these exchanges that got money taken from them. So I just want to say, check mark for Sound Financial Group. That was good advice. And it kept a lot of people out of it. Because over the years, every time we see these big booms where a bunch of people are asking about, should I do this? Should I do this? Should I do this? Almost certainly there's going to be a bubble because we observe it as we talk to hundreds and hundreds of people every year.
Yeah.
All right. Tim Draper, most optimistic call. It's going to go to 250,000, Corey.
250,000. And just, as of today, it is at 23,000 as of this second that I just looked it up. 23,000 and change.
I know some home remodeling contractors that are really hoping this happens because do you know how many kitchens and bathrooms are going to get redone in people's homes?
Just make it rain with that Bitcoin.
Make it rain. Make sure, by the way, if Bitcoin does go to 250, and let's say it's December, we haven't done our closeout episode. I got a bit of advice for you guys. This is important. That if you have something like Bitcoin go up a ton, this could be some individual stock you got lucky with. It could be crypto. It could be one of those crazy stocks that we talked about that Jim Cramer recommended. Okay. If you have one of those and you get an enormous payday because it's gone through the roof, do not dream of changing spending, budgets, asset acquisition, anything else, unless and until the portion that you're planning is going to do that other thing. Lifestyle, new car. I'll just get a car loan right now. I'll pay it off later after I sell the whatever. No. Do not make any changes until that is converted to cash. Because we have seen people ride stuff way up. We talked about Kathy Wood's ARC recently. It can go up. It can make you feel more rich, and you are not any richer yet. You might be. But if it goes to 250, don't get the kitchen redone until you've liquidated the portion of Bitcoin that is going to pay for that kitchen. That ends my public service announcement.
There's an Office episode where Michael Scott comes out of his office and just says, "Attention, everyone! You'll be getting $2,000 raises." And he's actually just demonstrating public speaking to Dwight. but like Stanley's like, "Honey, get the carpeting. We're gonna get the drape. Get your." Doesn't even have the check. Yeah. All right.
Yep. And that happens to a lot of people. So 250. My assumption is that women this is why he's saying it's going to 250, which I do like the connection of maybe women start getting into crypto and therefore people buying it more. It's a little bit like when women came into the workplace more in the 1940s and 50s. But 1 in 7 Bitcoin wallets currently held by women. It's a dam that's about to break. And then, so 250,000.
Compared to the last article, that, at least the rationale is some kind of logic, not like just a feeling.
Jim says so.
Right.
Let's see. Where's the next one? Another
Standard
guy.
Chartered. Yeah.
Standard Chartered, 5,000. May goes low. The prediction, one of the bank's list of surprises that are being underpriced by the market, would represent a 70% plunge. Bitcoin sell-off decelerates. The damage has been done. More and more crypto firms and exchanges find themselves with insufficient liquidity, leading to further bankruptcies and collapse in investor confidence in digital assets. The scenario has a non-zero possibility occurring in the year ahead and falls material outside of the market consensus or our own baseline view. Read that again. For those of you who can't pause it and read it.
Non-zero probability is one of my favorite phrases for sounding smarter than I really am. And I use it from time to time because it sounds so technical, but all it means is, it's the same as Harry and Lloyd saying, so you're saying there's a chance. Like, that's all it means.
In December 5th research note said Bitcoin may sink. So really, this is, and by the way, Corey and I read this, and then we talk about it together, and then we're talking about it with you guys. And even I didn't see this on the first pass. So notice the very beginning, in a December 5th research note, they said Bitcoin may sink as low as 5,000. So they said may sink as low. Okay? But they say they're predicting 5,000. But really, they predicted it as a non-zero probability, which is usually also used to make you look smart, to your point, Corey, and to kind of say there's a 1 in a million chance.
It's a long shot. Yeah.
And here's the thing that happens to us. You read this article, you love cryptocurrency, you think, aluminum to the moon or whatever, that you're going to Dogecoin it up. And you read this, what are you going to do? You're going to automatically gravitate toward the ones you agree with. And every one of these so far is so these people probably did way, way more thinking that's what's in this article. I grant that. But what they're sharing isn't like such super grounded data, and they just make all the predictions, and then then you see who it is. And then veteran investor Mark Mobius had a relatively successful 2022 in terms of his price call. In May, he forecasted Bitcoin would drop 20,000 when it was trading above 28,000. And it's currently at 16,000. It would fall
to 10,000 in 22. That did not happen. So this one's fun. They're, again, unironically saying this person got it wrong before, but now they're going to get it right this time. But see, I think there should be a federal law that if you're making public predictions, the net result of all of your predictions have to be averaged together in some kind of index. Meaning, he got it wrong before, so even if he's right now, he loses credit by the amount that he was wrong the first time.
Now this could just be copywriting. So these two sentences together, Corey. In May, he forecasted Bitcoin would drop to 20,000 when it was trading above 28. So that was in May of 22. Is trading. May 22 is still above 28 right there. And then he said it would drop to 20,000. And it did. He nailed it. It did drop to 20,000-ish before year end. But then he said Bitcoin would fall to 10,000 in 2022.
That did not happen.
Wait, but see, in May, so when was this other forecast? They don't even give you enough information to assess the forecaster. But that's hard to notice unless you read with a critical mind. And I hate to tell you guys this, that you cannot trust the financial media. You have to that's why we show our screen. That's why we show you what we're talking about. We post it in the show notes. We are going to do our darndest to not lead anybody astray or lead you to believe in an opinion without appropriate grounding.
And it's not that they're out to get you. It would be better. It would be easier if they were out to get you, because you could actually predict that behavior. It's just that they don't always know. You don't know who's writing the article or how much experience they have with the internet. The bar is lower than ever to getting on a site with a name that you recognize, because everybody's got such a draw for so much content, so constantly a need to fill that void.
Corey, I want to have you let our audience know something here.
Okay.
When you read a lot of articles on Yahoo, if you read to the bottom, they come from the Smart Asset blog.
Mm-hmm.
So if you see articles from the Smart Asset blog, why don't you tell Corey, our audience, what Smart Asset really is?
Well, Smart Asset is as an advisor marketing strategy. So the whole reason that smart asset articles exist is to have a link in the article to enable someone to click in and request a meeting with an advisor.
And we can show you countless emails where they solicit us, say, well, don't you want to meet with these people that need an advisor? And now that I know that, I read their articles a little bit differently. I'm like, oh, yeah, you're not getting advice. You are giving people some candy and then hoping they click on the next thing for something nutritious.
And we only know that because we've, when it first came out, we were intrigued by this, and we even experimented with subscribing with them to see what happens and because we thought, well, gosh, these people are like, we're up here on the podcast trying to help people with these kind of questions. Maybe if we meet someone right when they're reading that article and they have that question, we can really be a big help in interpreting it. But what we found is that folks were in all kinds of different states of mind when they were meeting us. They weren't really in a position to actually want the help that we were offering.
Yep.
So, so you got to know what the source is, and there's very few sources that are just there because someone's curious and wants to answer the question and is not going to make any money from it.
Yep. Well, let's look at the last couple of predictions and then we'll wrap. Carol Alexander, she says 50,000. She's a professor of finance at Sussex University, and it says she was not far off in the mark with her prediction that Bitcoin would slip to 10,000 in 2022. Well, she was 80% off.
Right.
On that. Catalyst would be more dominoes, tipping over. So anyway, she's thinking 50,000. See if we have that's it for the predictions for now. But what I think is going to be fun is when we check in on this, and maybe if we see a couple other interesting predictions in the first quarter, we'll bring them to you all. But to notice, and some of these may be amazing, and I think it would be really cool to be like, "Whoop, who knew Lamb Research would invent a brand?" But by the way, insert your favorite curse word in what I'm about to say. I guarantee you, okay, that if any of these stocks goes through the effing roof and like recovers its 2022 highs, I'm going to calm down, Corey.
See, now we know Paul's favorite swear word. What? Oh.
It is going to be because of something new. It will be because something they didn't know at the time this article was written. It will be something that was invented or released or a market change or something else, because that is what moves stocks. What moves stocks is new, novel, unpreviously known information. Like stocks were affected drastically when the tsunami hit Japan. In Japan, their stocks.
Right.
Nobody knew an hour before that was going to happen. Right? Like nobody could trade on that information. It was new. And that when we go back, we're going to do the research on these companies to see why their stock moved the way they did. And I promise you, probably even if it's negative, it will be because of things they didn't know when this article is written. And it's going to give us a really great piece of evidence for all of you. That's why we do this, so that you guys don't have to stub your toe on these mistakes, costing yourself tens of thousands, if not hundreds of thousands of dollars in unnecessary taxes and fees. And there's one thing that you can do that is going to have your entire financial future turn out. We saved it to the end. Just be sure to subscribe.
I was curious what it was.
Listen,
I was excited to find out.
Jim Cramer can make these predictions with so little evidence. If some guy can say Bitcoin's going to 250,000, why can't I say all your financial woes will be solved if you subscribe? And I'm not talking then you listen for 6 months. I'm talking by Friday. And if I'm wrong, send me an email. Send me an email. It's not guaranteed. For
the reason is Jim Cramer's not
guaranteed.
Regulated by the SEC like we are. That's the reason.
Oh, that's why he can say it, because he doesn't have a license I have. Let me take that back. Not guaranteed to solve all your problems. I do like my licensure. But it's worth noting. There's an example of something we can't say that they can, because they don't have the accountability. Their accountability is to ratings with their boss, and their boss is not you watching. Their boss is that media company. You are our boss, the listener, the client, and the person that we're working to help. design, and build a good life. And we look forward to seeing you guys next week.